Hi, everyone. Welcome to the TimingResearch.com Crowd Forecast News, episode number 245 for November 11th, 2019. We are recording this at 1 p.m. Eastern Time, and this is an audio-only episode, so we're going to have a good discussion for you today. My name is David Kosmeter. I'm the creator of TimingResearch.com, and I am broadcasting today from the Rio in Vegas. I was out here for the Traders Expo and to meet people. I got to meet up with Jake for a few minutes, who you'll be hearing from in a few minutes, and get to meet a bunch of new people that hopefully I'll have on the show soon. So today we will be discussing the 320th report, and if you haven't had a chance to take a look at this yet, just go to TimingResearch.com/reports, and you can access either the web or PDF version there. You can also be sure to subscribe to Timing Research on YouTube and your favorite podcast directory to get updates on new episodes there as well. So today I've arranged for Sam Bourgi, Jake Wujastyk, and Jim Kenney to join us, and Jim will be moderating, so I'm going to go ahead and turn it over to him.
Okay, thanks, David, and thanks everybody for being here today. We're going to go over a lot of different things here this morning, but before we get started, for people who are not familiar, Sam, could you start out by introducing yourself and telling us a little bit about what's going on at your place?
Absolutely. So thanks everyone for having me. It's always a pleasure being on this show. Once again, my name is Sam Bourgi. I'm a market analyst for TradingGods.net. Trading Gods is a platform designed to help traders and new market entrants understand the volatility market. Our primary focus is on the CBOE VIX Volatility Index and its related products, as well as the stock market. So that's mostly what we've been focusing on for several years now. And yeah, I'm very happy to be here.
Great. And we'll get into some of the ways you guys analyze that VIX in a little bit, because I think that's a very important indicator, something that's given me some good tips in this move we just saw. Let's go over to Jake. Jake, a little bit of background on yourself and what's going on at your company.
Yes. So my name is Jake Wujastyk. I'm one of the founders of TrendSpider.com. We are a charting platform really aimed at making some of the processes of technical analysis more efficient through automation and different ways to reduce some of those manual processes, such as creating conditions that you need to code in. We have a visual interface that you can create essentially your own set of conditions without having to code anything on the back end and have the system watch that. So that's really what we focus on. Recently, we've really just been focusing on getting our scanner out, which we hope will be available here in the next few weeks. And yeah, so that's what's kind of been going on our end, and just watching the market continue to rip.
Sure. Both of you guys bring something to the table in that everybody who likes to trade on their own, they want to make their own decisions. They do need data, they need information, and they need tools. And without such, it's just abject guessing. So the stuff you bring is very important. At the end of the broadcast, we'll explain how everybody could get a hold of you guys as well. Before we get started, as we're getting started, the first question always is what do you guys think the S&P will be doing between now and Friday? And give our best guess, because in this market, it's 3 treats away from doing the direct opposite of what we're thinking. But it did open at 30.80 today, and we dipped down to a little bit, 30.75, and now it's back above the open. So what are we thinking, Sam, where we'll be on Friday with the S&P?
On Friday, I believe it will be lower. So that will be my first answer, is that I think that we're going to be heading lower this week, and I'll give my reasons and my percentage as we go on. Yeah. There
you go. Great. I like a guy who's been here before. He knows what I'm doing. Some people go right into the meat and potatoes.
Yeah.
Forget about the handshake. Jake, what are you seeing here on 30.80 between now and Friday?
I'm gonna say higher, and just because today did catch a bid pretty quick off the open, and based on today's price action, we are kind of trying to hit daily highs here. So me personally, I think we may continue to move up the rest of the week, but we'll have to see.
Yeah, well, we got plenty of news coming up. We got earnings from Cisco, CBS, Walmart, Nvidia, Tencent, JD.com, and inflation numbers. So there's some meat on the sandwich this week. So we'll have to see how that breaks. Let's talk about a percentage confidence level that Sam was alluding to. Where are you at, Sam, on fixing a percentage to it might drift lower?
Yeah, well, as you said earlier, it's anyone's guess how this market goes. So I'm going to give you a solid 60% that I think the market's going to go lower by Friday. So more
likely than not, the preponderance. There we go.
Yes.
All right, Jake, what are you putting onto your? It's going to be higher.
I'm as much as I'd like to be confident, I'm not. 60%. I'd probably put myself around 55%. percent. The reason is I have looked at some of the weekly candles that have moved up, five candles in a row, and we sometimes do have that consolidation week after that. So, it's anyone's guess, but I would put it probably 55%.
Yeah. Well, right now, like I said, the momentum has been up, so that's you have to respect that. And then between the earnings and the CPI numbers and other factors we don't even know about, this a news event could turn the thing one way or the other pretty fast. All right. Well, let's talk about the reasonings behind what are you guys seeing out there in the marketplace that would make you lean one way or the other? A technical, fundamental, whatever you got. Sam, what do you think?
So I've been doing a lot of work following the fundamental news and following the developments, especially around the whole U.S.-China trade deal. And we've been ripping higher on expectations that this interim deal is going to be signed sometime soon. And it seems that way. But then Friday, President Trump came on and said that, we're not going to consider rolling back tariffs. We also just had his assistant on Friday as well say the same thing. We had Navarro talk about how a tariff rollback isn't going to be priced into the market, or it's not actually being considered in the Trump administration right now. So I'm expecting maybe some more reaction to that as we move forward, because a lot of the gains that we've seen recently have been, in light of that expectation that we're going to see an interim trade deal. So I think that could provide some cloud of uncertainty moving forward. Also, the economic numbers haven't been great recently. Something misses at the downside, we can see a reaction there. But I really am following the whole trade war developments, given how sharply the markets reacted to them, especially recently. We had all indexes hit record highs. A lot of it was driven by the whole trade war speculation positive. So I think that if that sours a little bit, we could be heading for maybe a downward consolidation. Not expecting anything huge, but that's kind of what I'm following this week.
Yeah, it seems to me sometimes that the trade deal is being managed like a TV show in that the rollback is really a big ace in the hole, because if we're going to try to get to 3,300, 3,600 during this election year, which I'm sure Mr. Trump would love to have happen, you don't want to play your ace in November of 2019. And rolling back the tariffs and opening up markets, that would be hopefully a big boost to the market. And maybe it's a little too early to play that card, right?
Yeah, maybe. Absolutely.
So, and with his background on TV, he knows, like Who Shot JR? Didn't they kind of stretch that out a while? That's a little long time ago, I guess, but somebody might remember Who Shot JR. Anyway, let's go over to Jake. And Jake, what's some of the things that make you feel that we might drift higher?
Mine are a little more from a technical perspective, but technicals kind of do complement the fundamental side. We're really just stair-stepping since probably October 10th, and it just seems like we're finding some support here. The gap filled from November 6th, and just based on today's price action, it does look like people still want to buy. The bearish side would be that there are a couple gaps below, one around like 303 to 304ish, 305. So that would be from the bearish perspective something that would be something to fill below if it did pull the other way.
Yeah, the other thing I noticed is back in September, I think $60 billion from the public was taken out of the market, and obviously that was the get in the market sign. And now I just saw on Bloomberg there's been a 59% jump in inflows into equity ETFs, and that would be throwing the yellow flag for me a little bit. You know what I mean?
Yeah, absolutely makes sense.
You get a lot of participation here at the highs. You know what I mean?
Yep.
But,
I definitely agree.
Now you guys are looking at indicators of all types. Sam had mentioned the VIX a little bit. Is there any other, or name some of the things, Sam, that like if you're looking at a market, what a little bit of a laundry list of things you look at to try to get an idea of where this thing might be going?
Yeah, well, a lot of the work that we do is on the fundamental side and reading the market overall. So I do keep track of the news. The VIX is something that we really keep track of on a daily basis, given just how closely it relates to the S&P 500. There's a very strong inverse pattern between the VIX and stocks. Typically what we see is that when stocks rise, the VIX falls. Obviously, it's about 75-80% of the time. That's the relationship that we see. So I'm looking at volatility over the past week or so. When the stock market has risen sharply, volatility has kind of standing still. And it is well below the historical average right now, the VIX, but it's still much higher than where it was earlier in the bull market, after Trump was elected. So, I mean, the VIX has been, I would say, slowly grinding higher, still well below the historic average, but I'm seeing signs that maybe it's bottomed out already. So the VIX is something that we track on a daily basis, and we look at various ETNs and futures that are tied to it.
Yeah, I've been watching the VIX for decades, and my conclusions are basically ballpark figures. And when you are 25 or greater, obviously you're going to possibly go into the abyss. If if you're 20 to 25, you're definitely going to have some kind of a good correction. And then 15 to 20, it seems to be kind of a stable market, not a bad market. And if you can get under 14, yeah, you generally have a pretty good shot at a pretty good rally. And I noticed that the VIX broke under, that 14 number, about, the beginning of last month. And that kind of corresponded. Well, I know actually it broke under 15 near the middle of last month. And obviously the rally that we've ripped off since then, kind of validates that a sub 15, 14 VIX is bullish. But like you were saying, and this is a good point. Also, the rollover decent declines have come over from this neighborhood of 11, 12, 13 too. So the good news is it's a positive, I think, that the VIX is down here for the bulls. But it's also cautionary that if it starts to break, this is where more substantial drops can actually commence from.
Absolutely. On Friday, it did approach 7-month lows around that level. So we definitely are looking at a very low VIX. I guess maybe I've been watching this market too closely for too long. Yeah. And I remember when it was in the single digits and in the low 10s consistently in 2017. And then we've been seeing, more bursts higher throughout the year as a lot of it has been tied to trade and other speculation about driving that VIX higher. So keeping track on that.
Yeah. It's hard to follow a trade deal that seems like it's being made up as we go along. So it's kind of hard to affix a real opinion of where it's going, but we'll have to see. Anyway, as far as your checklist on some things that you look at, Jake, when you're looking at a stock or a currency or something like that, and you're trying to figure out which way it might be going.
Yep. So I definitely look at the VIX as well for just a general broad market kind of health, if you will, to see kind of what people are thinking. And from that perspective, it has been interesting to see, we have found seems to be a bottom here, and that has had a huge bounce really since anytime we tested this area since like June of 2018, we've had quite a move up, within about 10 days. So it will be interesting to see if this one kind of commences the same way or if this is something that's just kind of gapped up today and more room to move down. But other than that, indicators, I do like to use fibs just as more of a kind of forecaster. So for example, on the S&P 500, I've got a measured move on the move from July to August. And then so our 1.618 fib level would be kind of my area above to watch, which is around the 315 mark. So that's something that I'm kind of using for the upside kind of forecast method, just really using the fib level and having that natural kind of human nature level, see if it's above.
So you have a chart that basically gives you those windows, those ranges.
So with TrendSpider, you're either going to have the ability to draw your own fibs, or you can have the system draw a fib for you as well. That is a function of how the trend line settings are, so you can change that up. It's not, TrendSpider's fib level. It's the trend line or the fib level that TrendSpider is showing based on the preferences that you're using. So it's a very flexible system. It's not like, hey, this is the only fib level out there, and that's it. It's very flexible.
So some people, they have their own opinion on how to do the counting, and then there's other people who would prefer maybe the computer to do the counting for them, to create the waves, you know what I mean?
Yeah. And, at the end of the day, technical analysis can be very biased. It's easy to kind of see what you want to see based on what your position is. And so what the automation side of TrendSpider does isn't to replace what you're doing. It's there to kind of complement and give you a secondary perspective. It's not, this is exactly what's going to happen. This is the levels you have to watch. It's, hey, did you think about these levels that you may have not thought of the first 10 seconds on the chart?
Yeah, it's supposed to be part of the soup and maybe either verify what you're seeing or maybe put into question something that you're not seeing because you're too close to the forest that you're not seeing you can't see the forest for the trees type thing.
Exactly. Yeah. It's there to kind of remove some of those biases and inconsistencies sometimes that you have when doing TA.
Now, Sam, with regards to some of the markets that you're following on the VIX, you say, let's start out with that. What vehicle do you use, when you're tracking that? Is there the direction funds or something like that? Or?
Yeah, so obviously, we can't trade the VIX outright. So on Trading Gods, we do a lot of work with the ETNs. We look at the VXX, the SVXY, the UVXY, the TVIX, looking at the direction of the market. Obviously the VXX is a directional play on volatility, so we track that. And the SVXY is actually one of the tools that we use if we're bullish on stocks, because the SVXY moves in the opposite direction of the VIX. So mostly in the ETF market is where we're focusing on. And those are some of the indicators that we use from a trading perspective, as well as just monitoring the actual VIX itself.
Yeah, I'm watching the volume here on the VXX. I have it at like 14 million, 14.5 million. This thing trades like an animal, huh?
Yeah, absolutely. It's a highly liquid market, and fluctuates on a second by second basis.
I would hope it's liquid. If those guys are putting a half a point in between the bid offer, they must go home with limousines picking them up, right?
Yeah, absolutely.
So it's you find it to be as far as liquidity and getting in and out, it's a pretty reasonable vehicle because of all that volume.
Yeah, absolutely. And there's a lot of different tools you can use to invest in or to trade the market. One of the things a lot of people that we work with, they think that, well, if I'm going to play the VIX, I have to think that the VIX or volatility is going to rise for me to capitalize on this market. That's not true. There's a lot of tools that you can use to capitalize on the VIX, even if volatility is declining. That's where the SGXY, for example, comes into play. It moves in the same direction as the S&P 500 at 3 to 5 times the pace. So some of the ways that we teach our users to kind of access the volatility market and think of it.
Yeah, this VIX has gone from 52 almost on the 52-week basis down to today it's on the low of 1846. That's a heck of a airing out on the downside, huh?
Absolutely.
Is this optionable too, right?
Yeah, yes, it is. It is.
Yeah. Do you work with the options much when you're working with the VXX?
We do some options. Mostly right now we're working on the ETFs though. Yeah.
I got you. So you're basically just trading the ETF itself.
Exactly.
Not using leverage to speak of. I mean,
no. I mean, there are some VIX ETFs that are leverage products, like the UVXY, for example, is a leverage product. We do trade that, as well as the TVIX. So there's a few that are inverse as well as leverage, and we trade directly with those.
Sure. I'm looking at the life of this thing, and it's right there at the lowest level. So obviously, unless it's going to fall into the abyss here, it's definitely worth monitoring. That's for darn sure at this point.
Absolutely.
Well, one other thing I was going to ask you guys, the formation of like a weekly high surrounded by lower weekly highs could occur here if we can't take out 3,100 by the end of the week. And do you see any significance into a chart formation where you have a weekly high surrounded by lower weekly highs and then do some selling and use that 3,100 as a line in the sand? Because like a 3,100 ballpark is the S&P high, and then obviously the week prior to last week it was lower than that. And if this week we can't take it out, then you've got a little bit of a weekly formation that may. I mean, do you find that to be any worth of any value? Either one of you?
Well, on my end, I do watch price action, but I generally kind of look at more lower indicators as well. So I said I look at the VIX just to get an idea of what the market's doing. But generally, I look for some type of divergence to be forming with the price action. So I think that will kind of be what I'm watching. I like to use the percent range for that. It generally will signal a little quicker than the RSI. And so that would be something I'd be looking at the end of the week to see if that, has ticked down on an up week and kind of go from there.
Many people might not be familiar with some of the language. So the last thing you said about rather than what was the indicator you were kind of talking about right there?
It's the Williams percent range.
The Williams percent range. That's unfamiliar to me. I'm sure it's unfamiliar to many. So could you explain it?
Yeah, so it's an oscillator. It looks very similar to the RSI, except it's like a highly sensitive RSI. So a lot of the time you'll see the percent range either go overbought or oversold before the RSI moves. And so generally, if you're looking for, let's say you're on the weekly and you see that the percent range is over, in the quote unquote overbought spot, but a lot of the time the percent range false signals. So because it looks overbought doesn't necessarily mean it's actually overbought. It's actually signaling momentum's coming in. And then you can use that with the RSI and kind of look at both of them together to get a better idea of what's happening. So for a lot of the time, let's say the RSI is at, 35, but the percent range is at -10, which is the top of the oscillator. To me, that shows that momentum's coming in and the RSI has more room to move up. So I kind of use them hand in hand.
One guy was saying about RSI that as long as it stays under 60, it still has a negative connotation. And if it's above 60, it has a positive connotation. Do you have any gut feeling on that remark?
It depends on what you're using, right? So if you're using, the 14-day or the 14 period RSI or percent range, that anything over 70 is I start to look at as, getting a little hot or just, getting the buyers coming in pretty hot. Now, if you're using, let's say, like the RSI 5 period, those are going to kind of
they're very sensitive. They're very sensitive because they're shorter term, right?
Exactly. So you may have to change those levels a little bit because you can have false signaling, that type of thing. But generally, over 70, below 30 is what I look at. That's kind of the I think what most people are looking at. So sometimes that's good because if you're looking at everything as everyone else is looking at it, can become self-fulfilling. But if too many people are looking at it, it may false breakdown. So sometimes I do like to change the inputs a little bit, depending on the time frame, right? So your higher time frames, like your weekly or your monthly, you're going to use a lower input, and then your 10-minute, you're probably going to use a higher input on to kind of make it a little more smooth for that shorter term price action.
So with your RSIs, it's similar to the guy who says, I'm going to look at the hourly graph, I'm going to look at the daily graph, I'm going to look at the weekly graph, and I'm going to get an idea of all the different time frames on how the prices look, and see if I can get some consensus here to get an idea of really where we're going. You do the same kind of a thing with the RSIs?
I don't.
Or somebody could do it.
Oh, easily, yeah. And you can do that on TrendSpider. You can create an alert and say, alert me when the 5-minute RSI, the 10-minute RSI, every RSI hits low 30. You're actually able to create an alert, and then whenever that, all of those conditions are met, you'll be alerted through your phone or your computer. So you can kind of look for those types of confluence between multiple time frames.
Now, before we turn back to Sam, one other question I have for you. We hit a high point in July at around 30.30, and then we hit a high point in September about 30.30, and now we've come up to 3,100. So we have a relatively double top, and then we have a new high. This new high, has it been confirmed by your Williams indicator and the RSI, or is it a lagging situation and it might be indicating something?
So I mean, on the weekly, since the week just started, the percent range, the 15-period percent range on the weekly is definitely very hot heated. But let's say that you move that, let's say that you maybe put that to a 50, you're going to see something completely different. But even at 50, the percent range is still overbought. So, it's hard to say. It's one of those things where the percent range, for me to really kind of, think about it in a deeper perspective, I would want to see it break below like -20. So anything from -20 to 0 would be quote unquote overbought. So once it would break down there, that's what I would kind of start looking at as, something to watch. But other than that, the market hasn't really given me any sign that we are getting near a top within the channel on the weekly. So, it'd probably be more from a just general trend line view that we're kind of getting a little high on the trend, but the percent range isn't saying
much. What about actual RSI? Like when we had the RSI in July at the highs, and then we had the RSI in September at the highs. How does the RSI compare now with those other two peaks?
It's actually higher.
Okay. And that would be more confirming than it would be denying, right?
Exactly. So in July, we had an RSI on the RSI 5 on the weekly was 77. Then when we topped out in September, it was 69, and now we topped out last week at 82. So we're definitely higher. But in the past, when the RSI has gotten that high, you've had continuation.
Yeah. Like I say, there's never one signal only that you can work with. That's why, obviously it's something you got to decide after you get all the information. Hey, Sam, outside of the VIX that we're working with, and you gave the VXS, XX, I'm sorry, is there any other markets that you're kind of keeping an eye on with that we could discuss?
Yeah, so a lot of the other markets that I follow I've been closely involved in the cryptocurrency market for a while now.
Oh, okay.
So I've been following that. I've been following, Bitcoin and the altcoins and where they're headed. I've also been following commodities, looking at gold. And I tend to take a more fundamental view on the market, and I see how gold's behaved combined with actions at the Federal Reserve. And I have a very, I guess you can say I have a very pessimistic view on where things are going. Obviously, I don't have any timing in place, but looking at the commodity market, I have been looking into crypto and monitoring closely things like monetary policy and data, and try to keep a pulse of the economy and where that's headed. And that's a lot of the work that I've been doing there outside of the actual VIX trading.
That's great. And I think it's very key because I read that China obviously is embracing the blockchain and embracing Bitcoin, and they're going to be starting exchanges. When you use your common sense, if your method of settlements is in a currency where the person who runs the currency can go around and just slap these on and slap these off willy-nilly, you'd be uncomfortable that you don't want your entire financial system built on that kind of dependence. And then the ECB head, when we were in Jackson Hole with all the people over there, he made made a long presentation on digital currencies as a settlement situation. So, these things have gone from theoretical stuff to people, pretty heavy hitters are moving the ball forward. And again, having the entire financial system settling in a currency that maybe people around the world are not very happy with that company, that country. It makes sense that these guys would start making some, methodology to settle payments in a different situation,
Absolutely. We're seeing that for sure. Absolutely.
What's the symbol of that one stock or ETF that deals GT something for Bitcoin?
GTEC. That's the Bitcoin fund from Grayscale. Yeah.
Yeah. And let's see here. GT symbol?
It should be GTEC, I believe. Or is it GTBC? It could be GTBC.
Probably Bitcoin, right?
Yeah.
Yeah, that makes more sense.
Yeah.
And not only, let me see here. It's called Green?
It's called the Grayscale. The Grayscale Bitcoin Trust, I think.
And how do you spell skill? S-K?
Yeah, it'll be Gray Scale SCALE. Yeah, GBTC is the symbol, yeah.
Okay, GBTC.
Yes.
Yeah. No, because I just wanted to go over it because I don't know how many people are following this. And again, it may be something for the future or as a part of a portfolio. I mean, the thing's at $10 a share about, so it's not exactly, it's almost like buying an option, right?
Yeah, exactly. I mean, a lot of people in the crypto community, and I have been following this for many years, they tend to get overzealous about Bitcoin and things like that. But I would say, look, if you want to invest in this market and you've done your research, I mean, do the same risk management you do with any other asset, right? I mean, allocate a small percentage to it and see where it goes. But I'm not the type of person to say, go invest everything in Bitcoin because the apocalypse is coming. But I think it's definitely demonstrated its value over time. And I think that, as you said, central banks are now beginning to embrace it. So the concept of digital currency, the concept of blockchain aren't going away anytime soon. And Bitcoin tends to be is the premier of those. So that's why it's something that I think is worth considering for anybody who wants to diversify away from the core financial assets. Yeah,
I mean, anything in its infancy is going to be extremely volatile, and this certainly is. But the thing here is it's a 2.7 billion market cap almost, and it trades between almost 3 million and 4 million shares a day on a 50 and 200-day moving average basis. So we're not talking about some obscure company that nobody's trading. We're talking about something that's trading. So and the PE ratio says 2.3 on it. So I don't know. It seems like it's a fairly low value thing. But,
and in the case of Grayscale too, they've attracted a lot of inflows now from institutional investors. If you look at their quarterly reports, they say that a lot of the new money that's coming into their fund, which now has $2.3 billion in assets under management, are coming from the institutions. So looking at where the money is going, it seems like segments of the financial system are beginning to embrace it. So.
Now, my view on the gold has been that we broke out at 1350, and then we ran up like a madman up to 1580, which corresponded to the lows of 2012. And so I was thinking that would be as far as the horse would run. And also, it was so far above its 200-day moving average that the probabilities were extremely high that we were going to pull back and consolidate, which is exactly what's happened. Now, on the downside here, my feeling was that 1400 to 1450 and then 1350 to 1400 would be two zones for people to start maybe taking another bite at the apple if they're a believer that the metals have a future, because at the end of these cycles, sometimes inflation does kick up. And this week, we're going to get a CPI number and a PPI number. And if they come out strong, and maybe that's why yields on the 10-year have gone from 140 back to 2 so fast.
Exactly. And I've been doing a lot of research in this market, and I mean, I see that, gold is being driven in part by the fact that, real interest rates are below inflation. And I think that insofar as you have that happening, you're going to maybe see more appetite for gold. But I just take a look at the whole financial system. I take a look at what's happening in the repo market. And I just think, this is a market that I should be following right now, gold, and that maybe I should start allocating a little bit more given where the pitfalls lie in the financial system right now.
Yeah. And do you work with GDX at all?
And I do a lot of gold miners as well.
And then they have the juniors GDXJ.
Yep.
Yeah. So those are two that people can sometimes look at. Do you have any gut feeling on the silver? Do you think it's just along for the ride, or do you think because that ratio is so spread out now that there's more value there?
Yeah, you know what? It is usually along for the ride, but for much of the rally we saw this year, silver has actually outperformed gold. So you see the gold-silver ratio has actually declined throughout the year. So I think there definitely could be more legs to silver moving forward.
Yeah, because I've been in it a long time. So, decades ago, it used to be 30 to 60 was the ratio. Then it became 60 to 80. Then it went over almost to 100.
Mm-hmm.
And the other metal that's perplexing is the platinum, which used to be a huge premium over gold, and now it's $500-600 under the price of gold.
Yeah.
Do you have any feeling on why that occurs? I was wondering out loud that maybe the industrial use for platinum and silver might have gone away a bit, and maybe that's the explanation why the relationship inverted.
Could be. I haven't followed platinum as closely, but I have seen its price decline quite a bit relative to gold. Absolutely.
Any other commodities that are striking you? The soybeans obviously are of interest because it's linked to this trade deal, it seems.
Mm-hmm. Absolutely. Soybeans, yeah. And also mostly energy as well. Again, looking at the macro picture of crude oil and the developments there. Yeah, absolutely.
Yeah, one thing I've been bringing to people's attention on the oil is that the Aramco deal is coming, and it's being valued anywhere between 1.2 and 2.2 trillion, which is obviously a wide disparity. But I was just thinking, common sense. Would they want to bring that kind of a investment to market in a tanking oil market? And I would say probably not. So at what to the level that they could control a rally, this would be the time where they'd probably want to see a rally if they could get one, so they can off this company that they're trying to off at the best price possible, right?
Absolutely. And it seems like their handle of the market has really weakened over the past few years. I mean, you take a look at the what they've been doing biannually, controlling the supply, but ultimately the rallies haven't been to what we used to see before. So $100 a barrel oil would require something major happening in the global supply system for that to happen again. So I think that there's a huge transition underway, and a lot of it is in the electric vehicle market, but also a lot of it is energy independence from the U.S. Right. And that's going to be pressuring prices, I think, moving forward. I don't really see a way out of that, especially when you look at U.S. producers being able to produce now at a much lower price point as before. So their stranglehold on the markets has declined quite a bit. But as you said, they should be looking for a rally if they're going to unload this IPO that they've been working on now for a few years.
Yeah, I mean, that's what I'm thinking. I mean, that might be very simplistic, but I mean, I'm just using common sense. If I'm trying to come to a market with and try to get 2 trillion valuation, I might have to break 60 and get out of this trading range to get that done. And this trading range has been pretty solid between about 60 and 50. But if I was trying to get a decent price for my offering, that breaking above 60 would certainly be helpful. So I'll have to see what happens there. And on the soybeans, what's your gut feeling? We went down towards 8. That seems to be the low right now. And then we tried to get above 9, which we did. Having a hard time with 9.50 and 10. Do you think we will possibly be able to take those things out, or what do you think?
I guess you follow this market more closely than I do the soybean side. How much of it do you think is going to be dependent on the U.S.-China trade deal and what China does with soybeans? Because I know that's been a really hot topic.
Yeah, in my opinion, I made a joke saying that President Trump imagines himself in blue jeans on a tractor in an Iowa cornfield signing the contract with Xi. But I just don't know that dream is going to happen. But I think I said the most important dream is, will the Chinese actually buy like they said they were going to buy, as opposed to anything? I think obviously if they came out and really shot that stuff, because I heard farmer bankruptcies are up like 20% this year or something like that. Yeah. So it'll be interesting. Like I say, the proof's in the pudding. You really got to clear that 9.50, 10 if you're going to have any real estate to speak of, because these little tight ranges are not that interesting. I'm going to swing it back over to Jake. And Jake, you were mentioning that you do some of this stuff with the currencies as well. Is there any currency that you're kind of looking at? And
so we definitely chart out the currency. We have the data for currencies. I personally don't trade crypto or forex, just because I've been trading common stock just since I started, and that's kind of what I stick to. Sometimes I'll do some options, but I mean, as far as the euro goes, that's one that's always kind of on my radar, just because my wife's from Poland, and so I kind of look at that versus how the Polish zloty is doing.
What is it called? The zoltki over there or something? Polski? What's the Polish currency?
Zloty. So it's Z with a it looks like an L, but it's actually pronounced as a W.
Okay.
So yeah, Polish zloty is something that I watch pretty often. Just when we go over there, it's nice to get a little bit of a discount on a lot of stuff because they don't use the euro. So it is nice to have a little extra cash there from their currency. But other than that, there's not a ton that I pay attention to other than just kind of the main ones. The pound's always interesting to check out sometimes, especially, just since it's gone down so much in the last few years after Brexit. So that's something I keep an eye on too.
How about this yen? The yen has gone from like 96 down to 91 and 91 and a half, and it does look like it's trying to turn. Any indicators that you're showing on the yen that might be worthwhile to take a peek at while it's coming off of the lows, or at least the recent lows?
Honestly, I don't really even follow how crypto or currencies move with indicators.
Right.
I would probably, if anything, be looking more at just the overall kind of trends and horizontal levels there. Technical analysis can be used universally pretty much on anything, but there are different markets out there that respond a little differently to indicators where common stock may respond to a little differently, and that can have a lot of different reasoning. Maybe just the overall money flowing in and out can change that. So for me, when I look at any currency charts, which isn't often, it would be looking at just the overall kind of channel it's in, or the wedge, triangle, whatever it's in, and then from there I would kind of look at it. I probably wouldn't even use lower indicators on currencies, me personally, but everyone's got their own.
Can you plug any stocks into your machine now and get a little bit of an idea what you think?
Yeah, absolutely.
Okay. Well, we got a few of them that are having earnings this week, so why don't we just throw some of those symbols out at you and see what you think. The first one, they're both going to be, these next two are in broadcasting, and they certainly have been on disfavor, but they are looking like they're trying to turn. One's called CBS, and they got earnings coming out this week. It's a $38 stock, used to be 57, and it's a 4.7 PE ratio, so that's dirt cheap, and it yields 185, which is not terrible, and it has moved up from 35 to 38, 39 here. Is there something happening there at all, or what do you think? And 3 million shares today. So yeah,
so I'm actually I just turned on the trends feature just to get an overall idea of what's kind of important right now, and it does look like we are nearing a resistance area above around $40, which is kind of a slanted resistance area from the previous pivot there at around 44. So that would be my area to watch. There is like the world's smallest gap above at like 47.85. So that is something, I don't know if that was maybe a gap down from the previous earnings they had, but from a longer term perspective, it's definitely on the lower side on the monthly, and it seems that it's caught a bid right at 36 area. So that would be the area for me to watch. It is interesting though to see that this general area that caught support the last 2 months is actually right at the previous top in July of 2007. So it is interesting to see that we caught a bid right at that previous top there from over a decade ago. So it will be interesting to see if we do kind of break out of this trend that's been very much on the downside since April of 2017.
This next one is in the same business. It's Viacom, VIAB. And to me, it's more interesting because it yields 344, and obviously dividends can be cut, but that's not a bad rate of dividend pay to watch a movie that's used to be $33, went down to about 21, now is at 23, pretty good today, and the volume almost getting to be 4 million shares today. What do you think about VIAB?
It's kind of in a very similar kind of wedge, if you will. It's kind of in this zone where it's trying to figure out if it wants to bounce on the monthly. From the open in the monthly for November, it's up, really nicely, but there is pretty solid resistance at that previous area of support, around 24.20 or so.
Yeah.
Previous support does like to act as resistance in the opposite way for resistance zones. So I'm just curious. I'm going to turn on the percent range.
And I'll tell you, like I say, if the low of 21 is in, and even if it's going to churn down here for a while, getting 344 yield is certainly not a bad deal. Of course, dividends, like I say, can be cut, but right now, that's a heck of a nice yield to watch a movie that is somewhat near its low.
Yeah, and if you do look at the percent range low from October 2017 on the monthly, we bottomed out at negative 99.63, and we are actually bouncing from last month's low of negative 98.62. So there's actually divergence there on the monthly if we do get a strong close for November. That is looking at the Williams percent range 50, right? So, depending on what input you're looking at, that's going to change. If I move this to like the 10, there's even more very solid divergence here. So if you use the Williams percent range 10 on VIAB on the monthly, you will see really, really solid divergence here from those lows in July and August of 2017.
Okay, a couple ones in a different sector. One's a networking company, as we all know, and it also has earnings this week, Cisco, CSCO. Is there anything indicating anything there? Because their last earnings report, they were kind of concerned about the future, and obviously you can see since their last earnings report, we've gone from the 56 area down to 40-something. So bottom line is it has been holding 46, and it pays 291, so it has a pretty good yield as well. What are you thinking on Cisco here? Is there any indicator there?
Well, I honestly haven't really looked at Cisco on the longer term before, and it's really interesting, right? So a lot of these dot-com bubble stocks, like Cisco and Microsoft, Microsoft topped out in 1999, right around $60 a share, and now it's at 146. Now, if you look at CSCO, we're nowhere near the highs in the late 90s. Actually, we're still way off those highs. So it's interesting to see this hasn't participated as much as your Microsofts or some of the other ones out there. So for me, I'm looking at the monthly. If I pull it back to the daily, it seems to be kind of finding support right at this 46 area the last few months, and it would really need to break that previous area of support before we gap down right around $50. So that area acted as support on August 14th before we gapped down huge the next day, and then that area also acted as resistance in early September when it caught a bid, moved up, and now we're kind of trying to bounce off that 46 level again now and possibly test that 50 area again.
All right, there's a couple more here in the area of semis, and two of them are coming out with earnings this week, according to my information. One's Nvidia, NVDA, and the other one's Applied Materials, I believe, AMAT. So let's take a quick look at Nvidia here, and the semis have been on fire, but people are wondering if they're stalled out here or not. So what are you seeing on Nvidia as far as the technicals?
You mentioned earnings are coming out, so earnings can kind of throw technicals out of the window. But if we were just looking, from a technical standpoint, it does seem that we've kind of created a base right at the 207, 208 area over the last week or so. And, for me, every time that we've really popped up to the next level on these stair steps, there's been volume backing it. So, there's clearly buyers still, interested here. And until it breaks out of this pretty defined upward sloping channel here that really started in early August and has traded in it since, until it breaks out of that, the status quo is just kind of trading within that range.
And what about Applied Materials? Pretty much, I think, the same. They look like the same kind of chart. They're all right at their highs. You know what I mean?
Yeah, that one actually is the daily candle's a little stronger than Nvidia there, but same thing. You got kind of this stair step look. It looks like the next leg happened over the last week or so. Buyers have kind of come in, and the supply seems to be drying up again for possibly the next move to the upside. There was a huge volume block on the 24th of October that really seems to be holding the price right around that 55 area, and clearly there's demand there.
Sam, do you follow many of these stocks a little bit yourself? Sam?
Sorry, guys. Yeah, I follow them pretty broadly. I have looked at Nvidia and its role in the crypto market. I have focused on a lot of the dividend stocks, but I've been following earnings in a broad sense. I know that we're on track for the third consecutive quarter of year-over-year declines in earnings. And it's interesting because I recently wrote about the whole Wall Street expectations game, how it seems like expectations for earnings are set artificially low so that you get those nice market-beating headlines about how company X or company Y beat on the top line and the bottom line. But if you look at what FactSet is saying, for example, their research, we are headed for the first year-over-year decline, 3 consecutive in a row for the first time in about 3 years. So overall, I'm following these stocks from the perspective of earnings, and I'll be keeping track of that as the week unfolds.
Yeah. The consumer is 2/3 of economic growth, so obviously it's very important what they do. And I've noticed that the consumer discretionary ETF has been stalled out a bit, and we do have earnings earnings, I believe, from Walmart this week. And obviously, if the numbers on Walmart do not show as robust a number as people hope, combined with the languishing of the consumer discretionary stocks in the ETF, that could be a catalyst for a little bit of a sell-off if a catalyst was ever going to come up. Right now, Walmart's at about 119. The high was 121 about. So obviously, it's teetering around its high point, but it does have earnings this week. So we'll have to see if that going back to school stuff and all that, paid off for them. And they already have their Christmas stuff up, and so they push right into the next selling season. But the refi boom is probably something to keep an eye on. They dropped the mortgage rates down under 4%, and so there is a possibility, because people have had maybe a 20% jump in the price of their house, that not only can they take money out and get rid of mortgage insurance, but they could also grab cash out of it as well. And we all know the consumer, if he has cash, he tends to spend it, as long as the stock market's rising anyway. And so that's an interesting factor as far as inflationary demand and spending demand and earnings demand, is the potential for a refi boom because of the mortgage rates dropping under that 4% number. But all right, well, here's the deal, guys. We are coming into the end of our broadcast here today, so I did want to give you guys ample time to again reintroduce yourself to the listeners, and also be as clear as a bell on how they can get a hold of you. And if you have any special offers, this is a great time to offer them. So we're going to start out with Sam, and Sam, let us know what's going on.
Great. So as I mentioned earlier, I'm part of an organization called TradingGods.net. Our main focus is on the volatility market. We teach volatility as an asset to trade alongside stocks, bonds, currencies, and so on. If your goal is to become a volatility trader, you can visit us at TradingGods.net. We do have a VIX Trader program. It provides you with a complete educational program on how to trade the volatility index. And we also have trading signals where every single trade that we make in the market, you'll receive in your inbox the exact entry point and the exact exit point. All that is available in the VIX Trader program. You can learn more about it at TradingGods.net. And if not, you can read more about the VIX and keep track of our daily articles. We do capture the market on a daily basis and give you a recap as the market unfolds.
Okay, that's great. And again, there's a lot of information to be had there. So check out Sam and at the website there's to get more information. Turning over to Jake. Jake, again, reintroduce yourself a bit. And again, if you have any offers, and also make sure people know how to get a hold of you.
Definitely. So thank you again for having me. My name is Jake Wujastyk, one of the founding members at TrendSpider.com. We are a charting platform. So if you use technical analysis to look at areas on the chart that you want to trade, this is something that may be useful for you, especially if you're looking to remove some of those inconsistencies and biases, and just make the whole process of technical analysis more efficient by introducing some of the automated features we have. But we also have a lot of proprietary things such as raindrops, which help you look at the volume profile in a very different way than usual. You can actually see the volume on the candle and get an idea of how the volume is flowing. So a ton of different things you can utilize, but we are a charting platform at the base. So anyone who does use technical analysis could find our product valuable. You can check us out, TrendSpider.com. If you have any questions, hello@TrendSpider.com. And we will have a huge Black Friday sale in the next couple weeks. So make sure to check that out. If you have any questions, we are very responsive on our social media as well, just @TrendSpider.
Okay. Hey, everybody who's listening, a lot of information out there for the taking. So I would strongly suggest you look into it and see if there's any value to you in your trading, no matter which way that you trade the market, technical, fundamental. There should be something out there that might be of some assistance. Right now, I want to let everybody know if they'd like to get my weekly update that I hand out or send out each week. You go to optionprofessor@gmail.com. Right now, I'm going to turn it back over to David. And thank you guys for being here. I think we went over a lot of information, and I think everybody got a lot of value out of it. So thanks a lot for being here, and I'm sending it back to David.
All right, thanks, guys. Great discussion. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast directory. You can also go to TimingResearch.com to get access to any of the past reports or shows, and including this one, as soon as I can get the archive posted. And also be sure to join us for Analyze Your Trade tomorrow at 4 p.m. Eastern Time. Stephen Brooks will be back on, so he hasn't been on for a few months, and so it'll be great to have him back. And Jim will be back to moderate. And you can get access to that by going to TimingResearch.com and clicking on the live button at the top. And I just want to thank my guests again for today. Sam Bourgi of TradingGods.net, Jake Wujastyk of TrendSpider.com, and Jim Kenney of OptionProfessor.com. Thanks, everyone.
Thanks so much, guys. Take care.
Thanks, David. Thanks, guys.
Thanks.